Hi all and welcome to TCM Education. In about 2 minutes we're going to find out if the rate or the interest rate in the US is going to stay at 4.5% or the Fed is going to make a change to it. Of course, everybody is all the expectations are that the interest rate is going to stay at the same level that it was a month ago, 4.5%. Any move lower will be a very positive for, and if there's going to be a move lower, highly unlikely, it's going to be by 25 basis points. If there's going to be a move higher, also very, very unlikely, it will create a move lower in the market. So let's brace basically for 4.5. That's, I don't want to say already priced in. What's not priced in is the FOMC meeting and afterwards the press conference. During the press conference, Jerome Powell, which is the Fed chairman, is going to answer questions from the media regarding the state of the US economy, and him being dovish or him being let's call it hawkish can move the market. On the FOMC meeting, the market tends to move. I don't have the statistics, but anywhere between 0.5% to 1%. We've seen moves of 2%, but that's highly unlikely to happen today. It can happen if it's going to move or things will go out of hand with interest rates like down 0.5%. Again, highly unlikely. Let's see what is expect volatility. That's a clear thing. So by the movement, the initial movement higher, obviously the interest rates are not going up. That's 90. It was already 99%, I think. Now let's see where we're moving here. Keep in mind that the target for all analysts is for us to move in the near future to all-time highs. That's 613. Also, most likely that those interest rate level will stay, and then we'll have this is the projection. Federal funds rates at 450, was 450, projected 450, and probably will stay there. And at 2:30 the FOMC press conference will start, and then we'll see way more volatility than we're seeing right now. So 40 cent up or down, that's not a lot of volatility. 0.5% in a $600 ETF, it's $3. That's now a lot of volatility. And if we move 1%, that's clearly something that will be noticed. Overall, what we've seen since the morning session is a clear move higher in the S&P, then a reversal almost to the lows, the 598. The lows are 597.50, sorry, 597.36. Now we've seen a spike up. We may see a spike down. Like I said, expect volatility. Not a great trading environment, to say the least. Now, when the markets or the FOMC meeting creates a trading environment is when the number changes. So let's say the number goes from 450 to 4, that creates a huge effect, a positive effect in the market, and then the SPY is going to run higher along with the leading stocks. And the opposite, if there was a scenario which is totally off base and off the table, where the chairman and his team of economists are deciding to raise the interest rates. Obviously, it's not on the table at all, because all the economic data that came into this announcement was positive, or mostly positive. So it's not like we're going to trade, or I'm suggesting a trade here. I know that there are forex traders that are trying to take advantage of the movement in the dollar versus either the euro or the Australian dollar or the pound or the yen. That's a different story when we're trading the S&P. So again, because I don't know if this move is creating strength in the dollar or weakness in the dollar. We'll have to check on it later. If you're interested, or I read any comments about it. This video is going to be posted in about half an hour, so you'll view it later on tonight or tomorrow, whatever. But it just, the idea here is to mentor those who are not watching and those who are will be watching, and to understand that every decision the markets act differently, and the scenarios are, I don't want to say infinite type of scenarios, but the best scenarios are when the number, as opposed to the press conference where it's a variable, the market needs to decipher the variable speech of Jerome Powell. When the number is easier. So if the number changes up or down, the reaction is very, very swift. Obviously, there is no number change in the interest rate. That's why we see this. Let's call it total choppiness. So there was a pickup in volume. Obviously, that's not a surprise, and you can see that we spiked to 601, immediately moved lower, and where is the path of this S&P today? It's going to be decided later, not right now. When I say later, after 2:30. After 2:30. Now, if anybody is thinking about trading this announcement, of course there are ways to trade it. You can trade futures, you can trade forex, you can trade the S&P itself, you can trade related stocks like Nvidia or JP Morgan. The best trades, I think, around the FOMC are either the futures or forex, not necessarily individual stocks or ETFs. But that's my opinion from the past. And anyway, there is no reason to trade when there is enter this wave of choppiness where it's more like random moves. And all this trading day was great until 10:30, maybe a couple of minutes after 10:30, when we topped above 601, highs of the day 601.22, and since then we moved lower. Now we touched 601 on a spike. Now we are spiking down, and then we're going to spike up, and this is not something that I want to trade myself, but again, it's a personal decision. In terms of stocks that are not being influenced by the market or the S&P, mainly stocks that obviously don't belong in the S&P 500, and stocks that are micro caps or small caps. Those are less likely to be affected by the movement, although at one point the idea here is that the S&P 500 affects everything. So you don't want to be, let's say the S&P 500 crashes, you don't want to be in a position against that, even if it is a small cap. Now, if it is a momentum small cap, maybe, but overall you don't want to play anything against the direction of the S&P. Okay, guys, it's a bit boring, I have to say. Let's take a look at Nvidia. Actually, I'm looking at the ETF NVDL to see the reaction on the news. So again, you can see exactly like the market, spiking up and down and now up again. This looks like a beautiful breakout over 60.30. I'm just making a point that if the market will rush higher, this NVDL, which is one stock ETF of NVIDIA, can be an interesting play. Too bad the only normal entry is the breakout over the highs of the day, which is never a great trade, but it can be a great trade on a day like today. I'm going to post an alert and see, maybe I will be able to access it. Keep in mind, guys, that this is not investment advice. We are not doing anything like that on the channel. Basically, we're trying to stay away from showing even trades, just to be on the safe side and not to bring ourselves into a position where people are criticizing. We are a pure news and education channel. No trading. It's the teaching about trading, but not really trading or suggesting trades or suggesting positions, nothing like that. Hope it was clear when we opened the channel more than a month ago that that's the pattern that we're going with. Okay, too bad it's a bit boring, but it is what it is. We'll do another video after being that we are limited with our this 15-minute cap by YouTube. I'm gonna close this video right now. There's nothing basically happening, and we'll start another video at 2:30, and that one will be posted also later on today, and maybe there's gonna be more insight in the second video. This video, let's call it, didn't bring home any bacon, basically. Very tough to learn anything other than, okay, it's a choppiness environment. Why? Because the Fed didn't change the interest rates, and I have to say that we've seen in the past where the interest rates did not change and the market did deliver the good move. Not in this case. Okay, guys, anyway, thanks a lot for being here and listening and watching this video. Please like it. There's not a lot to like in this one, so you know what, don't like it, I don't care. Hopefully the second video will be more exciting with the speech in the with the speech, and basically it's a press conference. It's not a speech, it's a press conference in the background. So we'll see you in about actually 20 minutes, and then it's going to be posted in your free time. Thank you. See you in our next video.